starting at just $98. Clear, comfortable, and ready to use right out of the box. And here's a study worth hearing. Research shows that wearing hearing aids can reduce your risk of dementia by up to 61%. Join over 1 million happy customers and hear the difference today by going to audionhearing.com. That's AUDIEN hearing.com.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here, and as we kick things off on a Wednesday, the big news that broke a little bit after 6 p.m. yesterday, the United States and Iran agreeing to a 2-week ceasefire in which they're going to begin conducting negotiations for a broader resolution to the conflict that the region has been in for the past 5.5 weeks. As you would expect, markets' reaction is very positive. You've got all major U.S. indices up north of 2%. You've got bonds being bid to the tune of the 10-year Treasury being down to 4.26%, down 8.5 basis points. You've got oil prices falling as well, down anywhere from about 13 to 15% on your major benchmark oil prices. And so the immediate reaction that you have in markets is exactly, again, what you would expect, which is a move back to a risk-on posture. The big thing that I think is worth watching over the next couple weeks is how the situation continues to evolve. And I guess, Paul, I'll kind of lay out my initial thoughts, and then we can kind of go from there. But basically, look, this is the first major positive sign that we've seen in the last 5.5 weeks as far as a de-escalation.
Yep.
It's also one that still has a number of questions related to it.
Definitely.
The first is that Israel and Iran are still lobbing projectiles back and forth at each other, and Iran's also still striking other parts of the region. So this is somewhat to be expected in the first day or so after the ceasefire for a couple of reasons. The first being Iran, as we talked about at the outset of this, they imply what's called a mosaic defense structure where local units are able to operate autonomously. There's a very good chance, based on communication in Iran, that some of these units simply have not received communication of the ceasefire yet. It takes a little while, and they may also just be disregarding it because they say, no, we're going to operate as we need to, and we don't necessarily trust that. So that's to be expected on that side. On the Israeli side, Israel very much, by all accounts, wants to continue military action in Lebanon, but Iran is of the opinion that this ceasefire would include any action against Hezbollah targets in Lebanon, and so it might take a little bit of time to sort things out there. So I wouldn't be surprised if you see, some continued fighting over the course of the day. If it continues through the rest of the week, it does potentially get to a point where, you start wondering, does it jeopardize the larger, idea of a ceasefire if the firing has not ceased?
Sure.
Other questions that we'll need to answer in the next couple weeks. There is a ton of debate over exactly what has been agreed to and not at this point.
again, you have, significant differences between the Iranian negotiating position, their 10-point plan, and the U.S.'s 15-point plan that they brought to the table. Can you bridge those differences? And can you actually get to something that sticks there? Don't necessarily know. We'll see. Again, I think there's clearly some positive momentum, but these are questions that are going to need to be answered, and they can be answered positively. Don't get me wrong. I'm just laying out what needs to happen here. Other questions that we need to see. Iran, as part of this, has said that they are going to allow traffic through the Strait of Hormuz in a controlled manner consistent with, their operating procedures. We don't know if that means full resumption. We don't know if it means quarter resumption, half resumption. We have no idea. They also have indicated that they are not yet willing to let ships through that are U.S. or Israeli. So, again, there's some questions as to exactly what resumes on that front. Other ones. The big thing, oil production remains heavily offline in the Persian Gulf region. 12.5 million barrels a day are shut in across the various Persian Gulf countries. And so what you have right now is that somewhere in the ballpark of 400 million to 450 million barrels have been shut into this point, and that number continues to move. And this is where you get into kind of a catch-22 situation where tankers won't want to transit in unless they have cargoes to pick up. But the producers won't want to pump, or rather won't be able to pump, unless they have ships that they can offload into, because all the on-land storage in the Persian Gulf is already full. So it's kind of a chicken and egg scenario. You've also got some longer-term things that you're going to have to work through, repairing damaged infrastructure and things like that. And so even if things go the best case possible, where we do get these questions resolved in the coming weeks, it's going to be multiple quarters before the area and region are back to anything resembling normalcy. And so you could still see some unexpected glitches in supply chains and product pricing and things like that as we go through the remainder of the spring and summer at the very least. So I think, again, room for optimism, but let's see how things develop here. And we'll see what the next couple weeks bring, and hopefully it is more good news as far as continuing to see a resumption of more normalized activities rather than a resumption of hostilities after a brief break.
Yeah, my biggest takeaways from this is certainly it's a step in the right direction, and obviously equity markets are reflecting that this morning in early trading. But like you mentioned, things that are worth monitoring over the course of the next few weeks here is there still are significant differences to sort of overcome between what the U.S. would like to see happen versus what Iran would like to see happen. And in particular, with the Strait of Hormuz, which has been the biggest economic focus of this whole issue, yes, they have opened it up, like you mentioned, with their military coordination. Ultimately, it's not something the U.S. is going to want, that this is the solution here going forward, that Iran would have influence on what happens with the strait, which was previously able to be navigated without really concern of having to deal with the Iran military. So that one is something that is really bears worth watching. And then on Iran's side of things, they would like the lifting of economic sanctions in place and guarantees of no more hostilities. All of those are sort of up in the air and could be sort of undermined at any point in time. And then the other big takeaway, regardless of, both sides coming to an agreement, like you mentioned, is the energy infrastructure impact. While we do have West Texas Intermediate and all the major oil benchmarks selling off significantly today, like you mentioned, Chuck, this is going to take a while to sort out. It is very important for us to reiterate that this is not like turning on a light switch to get these plants back online. There's a lot that goes into this in terms of pressure underground and different considerations that you have with getting these plants back up online that will take weeks to sort out. And then you also have just some energy infrastructure, like you mentioned, that has been completely decimated and the capacity is just offline. That will take years to resolve. So all these shocks have to take sort of some time to play out. So those are probably the two biggest things that are going to be worth monitoring. Step in the right direction here. Markets are reflecting that, but we need to find out sort of what concessions are going to be made or what agreements are going to be made between the two countries, and then see what the energy infrastructure impact is going to be and how quickly we get to getting back trending in the right direction. Because the slower this process takes, as you mentioned, the clock just continues to tick and more barrels continue to sit on ice and not be produce. So it's something that step in the right direction, but a lot of work to be done here.
Yes. So, again, I think that my view remains the same as it's been from the beginning, which is don't pay attention to what is being said publicly, because ultimately both sides are going to try to negotiate the best deal they can and want to appear to be saving face, with their respective populations. But instead, focus on, hey, from an economic standpoint, the things that matter. When do transits pick up? What is the rate of pickup? What flows are going in both directions? What can you see there? That's going to be, what determines this. And obviously, hey, do hostilities, continue to taper down from the levels that we've seen this morning? And do we get to a point where they have ceased entirely? I think these are the questions that are worth asking right now, because trying to sort through, well, this side's saying they want this and this one's saying they want... Look, I want a pony, but it doesn't matter if I don't have a farm for one, So ultimately, you got to sit back and say, look, each side is going to negotiate as they do, but the stuff that matters to the world economy is not what they're saying. It's what is flowing through Hormuz and what the region looks like as it adjusts to whatever the new reality is going to be. Once the conflict has fully ended here. So, excuse me. So that's where we stand right now. Let's take a quick break. When we return, let's talk a little bit about what's going on in gas prices after this.
Follow the Financial Exchange on Instagram for market insight, clips, reels, and daily money talk. This is the Financial Exchange Radio Network. When it comes to estate planning, many families focus on taxes. But understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute
is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Nearly 400 runners have already registered for this year's DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
So let's talk a little bit about what the current state of play, the new state of play, means for oil and gas flowing out of the Persian Gulf, and by extension what it means for energy prices worldwide. Big take that I have on this, Paul, is number one, in a perfect world, even if you get things moving right away, and this is data from Rory Johnston, who's an energy analyst, you've got 12.5 million barrels of production that's shut in across the Persian Gulf right now. Even if they were able to start turning that stuff on right now, it takes a couple months for it to happen, and so you still have another few 100 million barrels of production that is offline during that time. And so you're going to be dealing with some short-term supply issues for a couple months, even if things get turned on right now. Not so much in the U.S., but internationally, getting supply is going to be a problem because you've got this air pocket where just stuff was not going out of the Gulf, and so supply is limited until that happens. But the other piece here is I've heard from a number of people who are shipping adjacent.
Mm-hmm.
Is that the term that we want to use? Sure.
Depending
shipping
on,
adjacent.
I don't know the people, but I'll go with it.
Shipping adjacent. And basically, the sense that they have from chatting directly with people in the shipping industry is everyone wants to get their boats out of the Gulf because they've been stuck there for 5 weeks. The crews are nervous. They're tired. They're exhausted. They're hungry. Like, it's been a mess.
Yep.
So they're like, get our boats out. No one's in a huge hurry to send new boats in because they don't want more to get stuck right now, which is understandable, like, for two reasons. Number one, you don't want your boat being damaged in the event that something happens. Number two, remember, the reason that you own big, giant ships that hold lots of stuff is really simple. It's to make money. And if it is riskier to make money doing anything going through Hormuz than it is to go anywhere else in the world, shipping companies may simply say, hey, even with, insurance and this and that, remember, insurance might cover the cost of the ship. It doesn't cover all of your lost cargoes for, like, future trips that you can't take if that ship gets sunk for whatever reason. And so, ultimately, you may have shippers say, yeah, let's get all of our boats out as quickly as possible. There's still, 400 tankers of various sizes in the Gulf holding about 170 million barrels of oil. Let's get those out as quickly as possible. Are we going to send another 400 boats right back in? Let's ease into this. So this becomes the problem, number one, of, hey, if you aren't seeing more boats coming in to pick up a bunch of new oil, then all of that shut-in production doesn't come back online right away. Like, it doesn't start back up. It doesn't even begin the process of starting up right away because they have nowhere to put it.
Right.
All the tanks are full in Kuwait. All the tanks are full in Iraq. All the tanks are full in the UAE. All the tanks are full in everywhere. Bahrain, Saudi Arabia. Like, you go through the list. They don't have any more storage. And then even once you do start, remember, there's all kinds of damage that's been done to these facilities. When you're talking refineries, it might be weeks and months to get those repaired. When you're talking about some of the LNG facilities in Qatar specifically, the estimates that we've seen are 3 to 5 years of repairs because these things are so complex and there's so much power that goes into making natural gas into LNG that if anything is slightly off, the whole thing doesn't work. So it's going to be a process here, and the read-through then to the United States is, look, in the short term, overnight yesterday, remember, gas prices reflect what happened with oil the day before typically. You ended up with regular gas moving up 2.5 cents to $4.16 and 4/10. Diesel went up another 2.5 cents as well to $5.66 and 9/10. You're likely to see those prices come down a little over the next few days. Probably from, $4.15 down into the 380s, 390s is probably where you land. Anything from there, don't be surprised if you maybe end up getting a little bounce because over the next month or two, supplies are likely to be constrained. And then if you see a conclusive improvement over the course of April and May, then you've got your path to prices falling over the course of the summer and later into this year. How far, I have no idea, but that's your path to where prices fall for a more extended period and potentially greater magnitude. But short term, I think my expectation would be, prices fall probably into that 380 to 390 range, and then you might get a little bit of a bounce as oil prices probably bounce a bit in the short term, just because we're still supply constrained over the next few months, and then you can maybe get the improvement in pricing from there. So it's kind of a multi-phase decline that you'd go through there.
So if you're a shipper, what you'd likely need to see over the course of the next 2 weeks while you have this ceasefire agreement in place is further progression in terms of deal points being agreed on between the U.S. and Iran before you even consider sending that next ship out, right? I mean, first there's getting just the boats that are stranded there through.
Yes.
But you're probably going to need to see more improvements in terms of the agreement, or maybe perhaps it's just a concrete agreement over 2 weeks, which I think is a tough ask. Hopefully that can occur, but a lot would need to go right to get that agreement in place, and then in turn result in those new ships being sent back out with more oil or giving the full green light to resume production.
Yes, because the last thing you want to do is send a ship in today, because remember, first of all, the transit takes a week or so to go through Hormuz, get to where you're loading and load up. Then you've got to send it back out, which is another week. So the last thing you want to do is send a ship in, today or tomorrow, and then it gets stuck just before Hormuz again if something happens, right at the 2-week deadline.
Yeah.
So I think you're going to see, again, traffic moving out, which is a good thing, but you need to see corresponding traffic moving back in at a good clip in order for this to be anything sustainable. And based on what I've heard, anecdotally, shippers are going to wait a few days just to see what the lay of the land is before making any decisions, and then they'll see where they go. Right. So it's, again, things are better than they were yesterday morning. We're still not to the point where we can say, yep, you're going to have, regular transit just moving through later this week. It's going to take a little time to figure out what the lay of the land is and for shippers to get comfortable taking the risk again. And then that's where you can start to see, the real progress made. But we've got a few phases that we've got to go through before we potentially get back to regular transits. And the other piece that I'll add, long term, the amount of traffic that goes through Hormuz will likely drop because countries are going to start building more pipelines to avoid this problem in the future. But that's a multi-year thing, not a right now thing. Let's take a quick break. We've got Wall Street Watch and Todd Lutzke up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall
Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are surging higher after the U.S. and Iran agreed to a 2-week ceasefire if the Strait of Hormuz was reopened immediately, sending the price of oil plunging. Right now, the Dow is up 2.5%, S&P 500 up over 2% or 143 points, NASDAQ up 2.6% or 589 points. Russell 2000 trading 3.2% higher. 10-year Treasury yield down 7 basis points at 4.271%. And oil down 16%, trading at $94 a barrel. Several travel stocks are rallying on the heels of this ceasefire announcement. American Airlines up 9%, United jumping 11% higher. Separately, Delta reported better than expected first quarter results. However, the airline plans higher fares and fewer flights to manage costs as consumer demand for travel remains strong despite price increases. Delta stock up by 7%. Meanwhile, several energy stocks are pulling back in reaction to the ceasefire and the pullback in oil prices. ExxonMobil said it lost 6% of its global production in the first quarter due to the war. Exxon shares are falling 6% on the day. And Levi's seeing its stock rally 11% after the apparel company reported an earnings and revenue beat in the previous quarter, where direct-to-consumer sales for the first time made up half of its revenue. Levi also hiked its full-year guidance. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
We are now joined by Todd Lutzke from the law firm of Cushing and Dolan, and the segment is Ask Todd, which is your chance to ask Todd your estate planning questions. Phone lines are wide open at 888-205-2263. That is the number to call to chat with Todd live on air right now about your estate planning questions. Again, 888-205-2263 is the number. We can usually get through a couple of these, so make sure you get calling early so that you don't not get to ask Todd your question. That would be a shame. Again, that phone number is 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better. Now, how are you doing?
I'm okay. A little bit hurt. I dropped my cactus the other day.
It's always something with you.
Well, the worst part was I caught it.
Yeah?
Yeah. You never want to catch your cactus.
No.
Todd, let's talk a little bit about beneficiaries. So most people, I'm guessing, have some semblance of an idea as to who they want to name or who they want to have inherit their assets when they pass away. When we're talking about naming beneficiaries on a bank account or an investment account, what are some of the considerations for making sure that that's meshing with the estate planning that has been done in addition to what the beneficiary designations say?
Yeah, I think it's very important because, remember, if you just think you're going to avoid probate if you don't have an estate plan and you just name kids as beneficiaries, you could accidentally disinherit one. So we don't want that. But if we want to put like a trust in place, and let's start with a brokerage account and bank accounts, you simply don't. You're asking a question about beneficiaries. I get it, but I'm sort of gonna take it one step further and say, well, maybe I don't even need the beneficiary, because if I have a trust, a revocable or irrevocable for that matter, if I have a trust in place, I might instead take that brokerage account or those bank accounts and retitle the owner to be the trust. If I retitle the owner to be the trust, then I don't need beneficiary designations. Don't even need them. Why? Because the trust owns it, and the trust has language that says where all the assets of the trust go when you die. So it'll take care of all the people, children, grandchildren, however you have it laid out. And that's money, real estate, etc. So that's one distinction. However,
IRAs, 401ks, those kind of things, they can't go in. That you can't retitle those to the trust.
No.
So you do need designated beneficiaries. And now here's where the meshing comes in that you talked about, Chuck. Please read the language of the trust in making this decision. So if the language of my trust says all the assets that are in there upon my death go equally to my kids, pay it out, take it and go. Okay, well, if it says that, then my beneficiary designation on my IRA, contingent, it's always first the spouse, contingent, should not be the trust. Why? Because I don't need to run it through the trust if it's going to just pay out to the kids. I'll just list the kids and let them get it over 10 years.
Sure.
Done. But if you've got a trust in place where you're saying, geez, I want to protect these assets from future creditors and divorces of my kids, and if I can have generational building wealth tax-free and skip a generation when they die and have it get to my grandkids and all this fancy stuff in my trust, well, then I would want my IRA assets to be treated the same way. So if that's the case, then the meshing comes in where I would want my IRA beneficiary, contingent beneficiary, to be the trust. So you can't get it there while you're alive, but you can when you're dead, and then it's going to be taken care of the same way your trust assets are.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. Remember, this is your chance to ask Todd your specific estate planning questions live on air right now. Still got room on the phone lines at 888-205-2263. That phone number is 888-205-2263. We're going to take a quick break now, but when we come back, we're going to continue digging in. We'll get to your questions with Todd. That phone number, one more time, is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Todd Lutzke answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network.
We've got Todd Lutzke from Cushing & Dolan with us for Ask Todd, here to help answer your estate planning questions. Still room on the phone lines at 888-205-2263. Again, that is the number to call to ask your estate planning questions to Todd. 888-205-2263. Let's go to Lisa in Massachusetts. Lisa, what is your question for Todd Lutzke?
Hi, good morning.
Good morning.
My question is the rental property or primary home listed in the irrevocable trust able to get the market value step up upon the donor dying?
The step up in basis you're asking about?
Right.
When they die? Yeah. Okay. So the question, just so I can repeat it for everybody and make sure I'm understanding it, is you might want to put either rental property or your primary residence into an irrevocable, I'm thinking the kind of irrevocable Medicaid trust where you can protect it from the nursing home. Is that correct?
That's correct.
Okay. So are you married?
Yes.
Okay. So we would, depending on, if you have that many properties, likely we would be talking about 2 trusts. And the one thing I might add prior to this is your rental property, you might want to put that into an LLC prior to putting the shares of the LLC into the trust, okay? Just because in case somebody gets hurt on the rental property, they slip, they fall, you know the drill, they're going to sue you. And if you're the owner, they're going to go after everything you and your husband own, not just that rental property. Whereas if we place the rental property into an LLC first, which is a limited liability company, then the lawsuit would be against the LLC and not against you, the shareholder. So all your other assets, whether it's other real estate or money, would not be at risk for the nursing home. Would not be at risk for the creditor. So that's one reason to do it. And then you put the shares of the LLC into the irrevocable trust, and that's what protects the building from the cost of nursing home care. So you get kind of a double protection with rental property. Now, back to your question. Can the rental property and the primary residence go into this LLC? Yes. Into the irrevocable trust? Yes, they can. And once they're in there, your home's pretty easy, right? What can you do with it? Well, you can still live there. You can pay all your bills. You can rent it if you want to rent it. And you can even sell your home and buy another home right inside the trust. So you keep a lot of control over your home, and you get all the benefits of probate avoidance And in your case, probably 2 separate irrevocable trusts. So I might put, the home in one trust, let's say husband's trust, and maybe the rental property in wife's trust, right? And that way you don't have to worry about splitting the 2 properties up. The reason I would do that is because if the rent is coming in, I'd like the rent to come into just one trust rather than split it between the 2. And so that takes care of the home. What about the rental property? Well, the rental property can go in as well. Let's say it does go in through the LLC. And the shares are owned by, let's just say, maybe your trust, Lisa. Okay, what can you do? Well, by the shares being owned in the LLC, it's protected from probate. It's avoiding probate. It's protected from the nursing home in 5 years. And, of course, creditors suing because they got hurt. They're suing the LLC and not you. So, again, we have individual creditor protection as well. How do you deal with the rent? Well, the rent is going to be collected in a bank account in the name of the LLC. Who would be the manager? How about Lisa? Lisa, you could be in charge of that LLC. You could be collecting the rent into that LLC bank account, paying the bills, etc., right out of that bank account. And then when there's excess rent left over, meaning you've paid all your bills, but now you want the money in your pocket. Well, how do you get it? Well, you're the manager. You make a distribution from that bank account. In other words, just cut a check to the shareholder, which is this irrevocable trust. And now you deposit it into a bank account in the name of the irrevocable trust. And since that's rental income, remember, it retains its character when it comes out of the LLC into the trust. It's still income. And the trust is designed to say all income belongs to Lisa. Remember, they're income-only trusts. So that income comes into the bank account in the trust and automatically comes out to Lisa. You have it now in your pocket, Lisa, and you can go, grocery shopping, put gas in the car, whatever you want to do. It's your money to spend it just like you were spending it before you did this. And the last comment I'll make is, from an income tax perspective, there's no adverse income tax because the LLC is a single member LLC owned by the trust, so it doesn't file a tax return. And the trust is a grantor trust for income taxes, which means all the income gets picked up on your personal income tax return, Lisa, so no adverse income tax consequences. So, folks, that was a great question, and I hope provides a detailed answer for everybody thinking about these trusts. But, folks, there's more to estate planning than just what we talked about, because that was income taxes and estate taxes and probate avoidance. But what happens when Lisa dies? What happens when you die? Where does all your assets go? Well, the guide we're giving away this month is how to leave assets to your beneficiaries. And that can be the most important part of your estate plan. You might have special needs children. You might have kids that are not good with money, or you want to protect these assets from future divorces of the children. Maybe you're in a second marriage situation. Who knows? There's so many things to think about with your family as to how you leave these assets. Get it right, get the guide, and learn what your options are. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com, and you can download it right there. And go to our Instagram page, Cushing Dolan PC, for more information.
Todd, I want to follow up on the conversation we were having earlier regarding beneficiaries. And yes. Am I wrong in that the conventional wisdom surrounding naming beneficiaries on retirement accounts used to be to avoid naming a trust as a direct beneficiary? Or am I misinterpreting and misremembering that?
No, you're probably not. I think in the past it was maybe a little harder to do the rules. Remember, the Secure Act came out, and that kind of cleared up some of the problems we had before the Secure Act, which it was always. So you're absolutely right. It was always that way. But I think the Secure Act cleared up some of those issues, and you can name the trust as the beneficiary.
are there any issues that are still present, just in terms of if someone's, trying to think of, hey, what would the estate administration process look like for my heirs? What does it look like if a trust is named as the beneficiary of a retirement account?
So the trust doesn't have to have necessarily any special language in it anymore. It just has to be clear that you can identify beneficiaries. Usually you don't want to mix a charity with the beneficiary in the trust. So you want to make sure that you can clearly identify humans as beneficiaries. The nice part about that is once you've identified them, remember before you always had to say, well, who was the oldest child and all this different stuff with ages. You don't need that anymore. Yeah. Now it's just if we can identify the group, and the group, let's say, consists of children, well, then we know for distribution purposes, for what we call the required minimum distribution purposes, likely the IRA has to come out over 10 years. But I think from a operational standpoint, a lot of people can't understand that. They mean, oh, so does the IRA then get dumped into the trust 100% on the date of death? No. So it would stay Chuck's IRA, but the beneficiary would be the trust, and you would literally reach into Chuck's IRA after he's dead and make a withdrawal and deposit it into the bank over a 10-year period, into the trust rather, over a 10-year period. So that's kind of operationally how it works, and that can be a little confusing for a lot of people.
Yeah, no, that makes sense, and again, it does seem like things have changed quite a bit there. Todd, appreciate the time today. Thanks so much.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still more to come as we get towards the second hour of the show, including we're going to at least take a pause on discussing what letter shape the U.S. economy has. Now we're going to talk about what decade we're reliving instead. Then we'll talk about the state of the labor market, a little bit of private credit chatter, and also what are people saying about the upcoming SpaceX IPO, and is there a merger in SpaceX's future before it's even a public company? We'll discuss in hour two, just a bit.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting Armstrong Advisory ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate, But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here, and at around 6:15, maybe 6:30 last night, word got out that the United States and Iran had agreed to a 2-week ceasefire in the conflict in the region. And as you would expect, you've got risk assets risking today and risk-off assets de-risking. So, you've got S&P 500 up 142 points. The Dow Jones is up about 1,100. NASDAQ Composite up 571, so about 2.25% to 2.5% gains across your major indices this morning. You've also got the 10-year Treasury now down 7.6 basis points to 4.267. It was off around 10 basis points earlier today, so you're seeing a modest lightening there after coming in more significantly, but we'll see where things go. Gold's up 78.30 an ounce to 47.63, and West Texas Intermediate is down $17 a barrel to 95.95. After touched 117 actually at one point yesterday, but closed around 112. And so you've got oil prices falling about 13 to 15% depending on the metric that you are looking at. Obviously, this ceasefire is a really positive step in the right direction as far as potentially de-risking the region from additional conflict, but there still are a number of questions that need to be answered. Specifically, as we speak right now, the U.S. and Israel are indicating that they do not believe the ceasefire includes Israel's activities in Lebanon. Iran is saying that it does, and so this is something that obviously could, be problematic. You still have a wide variety of attacks taking place across the region as Iran tries to get word to its forces who operate in kind of a what's known as a mosaic structure where, local forces operate with more autonomy than in, say, the U.S. military. And so hopefully these, sporadic, bursts of conflict can wind down in the next day or two. Otherwise, they do potentially risk derailing the ceasefire. You then also have questions about what the state of play looks like through Hormuz and through the region afterwards, questions about what is going to be able to be negotiated as a final deal. So even though this is a positive step, I think that we still are not at the ultimate conclusion and need to see how things play out over the next several weeks here. And then we'll be able to, know a little bit more about what the world looks like after this conflict resolves. Hopefully. There's a chance this could flare back up and become worse again. We really don't know. And I would caution anyone into saying that anything has definitively or not definitively happened now, because still very early hours of this ceasefire, and things can develop in a number of ways, both positively and negatively. So just, understand where things are right now. With that in mind, other topics that we want to get to, let's talk about this one here. Oh, boy. The U.S. economy is replaying the 2000s, not the 1970s. So we've gone from, Tucker, what was it on Monday? It was the E-shaped economy?
Yeah, E-shape, yes.
Lowercase or uppercase?
Uppercase, right?
Don't know. I didn't read it because I can't do any more letter-shaped economies. Which...
The K one was disputed on yesterday's show also, just to add that in.
Yeah, we just can't do any more letter shapes. Let's move to, eventually, again, we're going to be doing, like, the Greek ones, and then we move to the Cyrillic alphabet, and it's like, guys, like, come on. Like, let's take a break here. So, Paul, why does this piece from Bloomberg Opinion say that the U.S. economy is replaying the 2000s, not the 1970s?
All right, so Chuck, what it goes in to say here is it makes some comparisons to the 2000s. The first being that the labor market is at a weak point at the moment. They fail to mention how significantly just fast and furious it was in years prior, but fair point. In 2025, the Bloomberg piece here makes a distinction that we had only 116,000 jobs that were added. That's the lowest that we've seen any year outside of recession. You compare that to the 2000s, where in 2001 we did have a recession where 1.6 million jobs were lost, and then in subsequent years we didn't really get back to pre-recession employment levels until 2005. We also had in that era pretty low income growth that is somewhat parallel to what we're seeing today, where there's not a tremendous amount of income growth in general. I will give them this point a little bit. Where I start to have issue with this piece is the next bullet point that's mentioned here outside of the labor market is the rising consumer debt and delinquency rates. So obviously many of us know that heading into the mid-2000s, we had a significant laxing of credit standards all across the board, and it metastasized into the worst and biggest issue of the whole bunch being the mortgage market, or the housing market, or mortgages. And the piece here hits on the rising level of credit card debt that also went on during this period of time in the mid-2000s, where credit card debt rose as well as some other areas of debt. But it excludes the fact when it makes the comparison today, saying that, hey, today we're also seeing credit card debts rise and student loan debt is up. They ignore the fact that the housing market from a mortgage standpoint and mortgage debt is far superior to what it was during that period of time in the mid-2000s that the comparison is being made here. 70 to 75% of household debt back in the 2000s leading up to 2008 was in mortgages. And so to ignore the fact of a significant portion of all of our household debt lies in our mortgages, which are locked in at pretty low rates and have much stronger equity cushions than back then. That's where I start to take issue with this piece a little bit. Ultimately, the rising credit card debt and potential for increased delinquencies there could lead to a slowdown in consumer spending. I'll give it that. But this idea that the debt market is the same to where it was in the mid-2000s, I just have issue with that. And the final point is just the systematic risks in the concentration of a financial bubble, making the comparison of the derivatives market back in the 2008 era to some of the private credit troubles that we've discussed today. A bit of a reach, and I don't think the piece is trying to say it's identical parallels. It just is trying to make the point that there's similar ingredients, but have issue with some of those there.
Yeah, I mean, look, here's the thing. Everyone wants to look for the historical analog to be like, well, it's just like when I was a young boy growing up on the farm milking the cows. And like, I get it. Like, we're all nostalgic for our childhood, and like to be able to be like, yes, this is familiar to me. I know exactly what to do. Unfortunately, like it's always kind of something new. Like history rhymes, it doesn't repeat. And look, I've said for a while now, you can find portions of the 1970s here.
Mm-hmm.
You can find very clearly like portions of 1990 here now with the conflict in the Gulf.
Right.
You can clearly find tech bubble parallels. You can clearly find mortgage market parallels with the private credit stuff. So like you kind of have, as I've said for a while, you've got this turducken that you've built of kind of like some all kinds of different potential problems that are looming out there. And to this point, the thing that I will say that you got to keep coming back to, because again, like you got to have a constant on this. Despite any of these potential problems, the U.S. economy has kept chugging.
Mm-hmm.
The labor market has absolutely slowed, and there's a problem there, but it has not impacted consumption in any meaningful way. It has not impacted the overall growth trajectory of the U.S. economy in any meaningful way. It may still end up doing that, and these are the things we need to continue to watch for the next year or two, but despite all of the risks present for quite a while now, the U.S. economy has remained remarkably resilient and strong during that time. There are certainly problems that, I think we need to see how they evolve over the next 3 to 6 months. But, again, you've got, if you really want to play the comparison card, it's not any one. You've got pieces of like 4 or 5 different situations that are playing into this, and how it evolves from here is anyone's question. As to what we end up seeing on this. So let's take a quick break, and when we return, we've got some trivia, and then I want to talk about kind of a major story from Anthropic, the AI model company yesterday. This one caught my attention, and I got to tell you, this is something that is impressive, scary, and world-changing, all rolled into one. Let's discuss when we return.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and on this day back in 1983, magician David Copperfield pulled off one of his most audacious illusions when he made an American monument disappear. Our trivia question today is which American monument did David Copperfield make vanish in 1983? Once again, which American monument did David Copperfield make vanish in 1983? Be the seventh person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
So, yesterday, Anthropic, who runs the Claude family of large language models, they made an announcement that caught my eye. And they have a new model that is being released shortly, dubbed Claude. It's probably pronounced Mythos, but I'm going to pronounce it Mythos because there's a great Greek beer that's pronounced Mythos, and I'm going to call it that because let's do that. So they've got this new version of Claude rolling out called Mythos or Mythos, and basically I'm going to quote from them just because it's wild what happened here. Over the past few weeks, we've used Claude Mythos Preview to identify thousands of zero-day vulnerabilities. That is, flaws that were previously unknown to software developers. And a zero-day vulnerability means basically if executed upon, it can result in problems that day on t=0 as opposed to like causing problems down the road. So thousands of zero-day vulnerabilities, many of them critical in every major operating system and every major web browser, along with a range of other important pieces of software. The following are three examples. Mythos Preview found a 27-year-old vulnerability in OpenBSD, which has a reputation as one of the most security-hardened operating systems in the world and is used to run firewalls and other critical infrastructure. The vulnerability allowed an attacker to remotely crash any machine running the operating system just by connecting to it. It also discovered a 16-year-old vulnerability in FFmpeg, which is used by innumerable pieces of software to encode and decode video, in a line of code that automated testing tools did 5 million times without ever catching the problem. The model autonomously found and chained together several vulnerabilities in the Linux kernel, the software that runs most of the world's servers, to allow an attacker to escalate from ordinary user access to complete control of the machine. And they found thousands of these. These are just 3 of the examples they gave. So what they're rolling out is something called Project Glasswing, where basically they're working with 12 companies, Amazon AWS, themselves, Apple, Broadcom, Cisco, CrowdStrike, Google, JP Morgan Chase, the Linux Foundation, Microsoft, NVIDIA, and Palo Alto Networks. And basically what they are doing is they're saying, look, we're not rolling this model out to anyone else right now because what we found is so dangerous and so powerful that we can't allow it into the hands of the broader population until these companies go and figure out how to patch the crap that we've found. And by the way, we might find more of this. So, again, my view on AI for a while has kind of been evolving towards, look, the early models, and being able just to chat with them, that's not really where the meat is. And I thought that was going to, die out because you can only make so many pictures of turtles bobsledding. You just can't do too many of them. But the important thing to remember is that every time you're using an AI program, you're using the worst version that will ever exist into the future. There's always going to be more powerful ones, and that we will absolutely have more powerful tools in the future and be using more AI in the future than we are today, even if the profitability of that is in question. This, to me, is kind of the next level of that. When the company developing the tools literally says, guys, there's a problem here and we can't let you have this because of how many potential issues we found releasing it, it suggests that we're kind of getting to that next level. And quite honestly, I've been thinking a lot about this, just because in any line of work you think about, okay, what does AI mean for my business? And where I've kind of landed, personally now after seeing this is, look, the evolution on this is so fast, and there are so many smart people that are plugged into all of this that are trying to invent the next big thing and do this and that. I think the average person, quite honestly, it's not worth trying to keep up with. Just accept that someone out there is going to build some really cool things using this, and you'll be able to use them in the future. Sure, you can try to become someone who's on the cutting edge. You probably won't be able to, because what these companies are doing with their internal tools is so much above and beyond what you can do, that trying to learn hey, here's what AI people were telling me was good in January. If you're trying to learn that now, you're already behind the curve. 2 months and you're out of date on this. And I've never seen anything like that before. I don't know what it means for the broader world, but I saw this and was like, wow, this is the first thing that I've really seen that makes me think that it's not just going to be an iteration of, oh, we can do this more efficiently, but the entire world is going to change because of this.
Yeah, and also from a geopolitical perspective, it also reinforces just how critical this will be for national security standpoint to ensure that you have the lead with this technology, because the potential for cyber attacks, if the wrong person were to harness these systems, it would be economically and otherwise devastating. So it's a little scary to kind of to view.
So this raises the really interesting question, which is, if Anthropic has in fact created tools that are already this powerful and will continue to evolve, there's almost no chance in my mind that they're able to stay a private company.
Right.
The U.S. government would say, no, this has to be property of the U.S. government.
Yeah.
It's
a hard one to...
There's a reason why the U.S. government does not let, private citizens own and operate certain things, fighter jets and things like that. If viewed similarly, you can absolutely see how this could go down that path. Or at least certain parts of it would have to be owned by the U.S. government, with the consumer-facing side being split off into a separate entity.
Sure.
Let's take a quick break here. Markets remain broadly positive following the news of the ceasefire from last night. We'll continue to watch how things evolve on that front. When we come back, we'll talk a little bit about the labor market, and then we've also got a little bit more in the private credit space to discuss as well. Stick around.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to.
Right, and the guide does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes, and so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are 2 ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number, again, is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets staging a strong rally after the U.S. and Iran agreed to a 2-week ceasefire if the Strait of Hormuz was reopened immediately, sending the price of oil plunging. Right now, the Dow is up 2.4%. S&P 500 up 2.1% or 143 points. NASDAQ up 2.6% or 573 points. Russell 2000 up 2.8%. 10-year Treasury yield down 7 basis points at 4.267%. Oil now down 15%, trading right around $95 a barrel. Several travel stocks are rallying on the heels of the ceasefire announcement. American Airlines is up 7%, while United jumping 9% higher. Separately, Delta reported better than expected first quarter results. However, the airline plans higher fares and fewer flights to manage costs as consumer demand for travel remains strong. Despite price increases, Delta up by 6%. Meanwhile, several energy stocks pulling back in reaction to the drop in oil prices. ExxonMobil said it lost 6% of its global production in the first quarter due to the Iran war. Exxon shares are now down nearly 6%. And Levi Strauss seeing its stock rally about 11% after the apparel company reported an earnings and revenue beat in the previous quarter, where direct-to-consumer sales for the first time made up half of its revenue. Levi also hiked its full-year earnings guidance. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked you the trivia question: which American monument did David Copperfield make vanish in 1983? That'll be the Statue of Liberty. Robert in Quincy, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Robert. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
What did he do with it?
Still missing.
Still a mystery.
It's still gone?
I don't know, man.
Did anyone look at his yard?
Just out front of his lawn.
He's
made it into a fountain.
He's moved into the head of the Statue of Liberty.
Yes.
It's his new house.
Yep.
Let's talk about this piece in Wall Street Journal, Paul. Why more people are dropping out of the job market. Why are they doing it?
People are getting old. No,
speak for yourself.
What's happening here, Chuck, is we have a participation rate that tries to capture the percentage of the population that is working over the age of 16. So there is the participation rate, and then there's also the prime participation rate. So the prime participation rate is very high in this country right now. That's between ages of 25 and 54. We're seeing really strong participation rates between people in those age demographics. However, if you look at the broader sphere of 16 and up on a much larger span of ages, we're seeing that the participation rate at 62% in that demographic. That's the lowest since 1977, and it's really been falling since the early 2000s. It did kind of uptick post-COVID back in 2024, but what we have is the baby boomers are stepping away from the labor force. The participation of those who are ages 55 and older in the workforce was 40% back in January of 2020. That now sits at 37% as of last month. That was the lowest mark in 20 years. So however you slice it, just a lot of these people are stepping out of the workforce. You also have the combined fact that from a supply side of things, there has been significant restrictions on immigration. So you have less new entrants into the workforce from that pipeline that's been largely shuttered. And as a result of that, you have a participation rate that's low. What does that mean, and why should we care about it from an economic standpoint? It can potentially cause labor shortages in the future if you don't have enough new supply of workers coming into the workforce, and you also need to have typically new workers in the workforce to produce more stuff for more of us to consume more stuff and to grow the economy. You can combat that a little bit with productivity gains, but it's harder over a longer period of time to have sustained productivity gains to offset not having newer workers in a specific sector. And the shortages also can lead to inflationary pressure. If there are only so many mechanics out there or whatever sector you want to look at, that can lead to pricing increases and hurt from an inflationary standpoint.
And look, here's the thing. There are two ways that you can get new workers into the workforce this year. Number one, you can have babies 16 to 18 years ago. Number two, they can come from somewhere else in the world. That's it. Those are the two options. Given Tucker, aside from our use on the show, have we licensed the time travel technology to anyone else?
No, God, no.
No. Okay. So we can't go back in time to 2008 and have more babies. We can't. The ones that were born then, all 4.2 million of them, they're coming into the workforce right now. Some of the ones that were born in 2010, the 4 million babies, sure, some of those 16-year-olds are coming in the workforce now. The 18-year-olds will be in a few years, maybe some of the 22-year-olds a few years after that. In any case, we know how many American babies are going to grow into American adults and join the workforce. It is fewer than the number of baby boomers leaving. As such, you have this gap that historically has been filled by immigration. Right now, we don't know exactly where immigration levels are, but the estimates are that you're basically net zero or maybe even a slightly negative immigration trend at this point. So overall, what this has done then, Paul was talking about the broader labor force participation rate. If we look at the age 25 to 54 participation rate, prime age is what it's referred to. You go back 10 years ago, March of 2016, it was 81.3% of people in that demo were in the labor force. Today, it's up to 83.8%. Paul, do you know what the all-time high is that we've gotten to on this?
I want to say 85.
84.6. We never even got to 85. 84.6 was in January of 99, right as the tech bubble was bubbling, the Matrix had yet to come out, like everything was hot then. And that's the highest that's ever gotten. What it means is there's relatively little slack in the labor force, actually, in terms of who can come in. And people say, well, Chuck, like 83% means there's still 17% more people that can come into the labor force. Wrong. And the reason why it's wrong is because not all of them ever will. There are some of those people that stay home taking care of children. There are some of those people that are in school for advanced degrees. Doctors, lawyers, nurses, you go down the list, people getting MBAs, whatever it might be, there's people that are in school. There are some people in that demo who might be wealthy enough to retire. There are some people in that demo who might just be living in their parents' basement, not in the workforce. There's all kinds of reasons why you're never going to get to 100% there. And so what this does mean is that you could have a really weird scenario that if this plays out for an extended time where job growth could remain really weak, but wages could go nutty, eating into margins or forcing price hikes because there isn't enough labor to go around.
Right.
The counter to this is, does artificial intelligence provide enough of a productivity flywheel to generate what businesses need as far as productivity growth and keeping wage growth in check for them? Maybe. We don't know, but this is a brave new world in terms of we've never seen a labor market like this, and we've never seen the potential for changes with AI like this. And so I think it's just a really interesting situation to watch here to see kind of what we get out of all this. So that's interesting to me is all I'm saying. It's a really interesting labor market right now. Folks, the Armstrong Advisory Group has a guide available this month. It's titled Building Your Emergency Financial Binder. It's all about making sure that, hey, if something unexpected happens to you, you have that binder in place so your family knows what you have, who to call, and what to do. Everything from how to organize key documents, different accounts, contacts, and instructions. Make sure you get that put into a clear format that can be used by your loved ones to save them a bunch of time and hassle when they are already stressed about something bad that has happened in their lives. So, again, I think this is a really, really useful, really functional guide for everyone to help make things easier for their loved ones, just so that they can have some peace of mind as to, hey, if anything happens to mom and dad, or if anything happens to my spouse, here's the list of who I call, here's what I do, and everything's right there in that emergency financial binder. 2 ways that you can request it. The first is by calling 800-393-4001. Second, you can go to armstrongadvisory.com and click the button right on the first page to request the free guide. Again, that number is 800-393-4001, or you can go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
The Financial Exchange streams live on X. Stay on top of the markets and get live reaction as it happens. This is the Financial Exchange. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Hey, the Money Matters mailbag returns this Friday on the Financial Exchange. It's your chance to ask the guys questions about business, the economy that you want answers to. Maybe some life questions. I don't know. You can call 339-399-4333 and leave your voicemail anytime, day or night. That's 339-399-4333. Or you can shoot us an email to tfeshow@gmail.com, and we may use your question on the show.
Paul, what do you got for me for Stack Roulette?
AI giants are going on the charm offensive to avert public backlash. A piece here from the Wall Street Journal where polls are showing that AI is not as popular as, well, I guess you could probably have projected that it wasn't going to be as popular once it started to get going. Maybe not as popular when it first came on the scene and the turtles were bobsledding or whatever you referenced before, the good old days. Now you have companies like OpenAI and Anthropic trying to put together a wish list of policy proposals that would help combat people's fears over job replacement, wealth concentration, trying to float out ideas of 4-day work weeks, basically just trying to curry favor with the general populace, which has had some skepticism on artificial intelligence and the form that it may take. Anthropic, similarly, too, is trying to pair up with companies that it had really inadvertently bludgeoned their stock prices because of the concerns that Anthropic would release tools that would allow for software development to be far easier and less cost intensive than it once was. But yeah, it'll be interesting to see. I feel like it's going to be a hard battle to fight, Chuck, to keep AI in any really sort of popularity contest performing well. It seems like an uphill battle that they're going to face here.
Yeah, you know what the problem is that these companies are run by weirdos who have been bad shepherds of technology for the last 15 to 20 years, and people feel betrayed by them, whether you're talking about privacy, whether you're talking about safety, whether you're talking about just about anything. And so ultimately, if you see these companies are headed up by people that have not treated you properly in the past, why are you suddenly going to believe they're going to be good stewards of something that's, exponentially more powerful than what they've already been in charge of? It's just like, you're not going to trust Mark Zuckerberg because you're just not. You're not going to trust Sam Altman because all the people around him tell you not to trust him.
Well, yeah,
and he's a weirdo.
The shift from nonprofit that OpenAI was initially founded under to now having tons of investors, billions of dollars raised, and clearly the focus of at least a looming IPO, it leads to decisions as a business leader that don't take those things into account of protection and privacy and all these other policies that you should have as a company. That gets thrown by the wayside to chase the almighty dollar. And that's why, you're right. People are right to have concerns, because when you get a lot of investors at the table committing billions of dollars and they want to see return on their investment, then all of a sudden you start to get concerned with OpenAI and maybe others that start to lack some of their security, verification, or all the different things that come with it.
So that's what's going on in the AI world. Let's see. What else do we want to talk about here? I want to talk. You guys didn't cover this company retreat story yesterday, did you?
No.
Okay. Wall Street Journal. Inside a corporate retreat that went very badly wrong. Senior executives at the tech company Plex were eager to trade their 120 fully remote staffers to a week-long corporate getaway in a tropical paradise.
Sounds good.
The plan for the Honduras trip was simple. Company meetings and team building by powdery soft beaches during the day and island fun at night at a cost of roughly $500,000 to the company.
Ooh.
So,
I thought Honduras would be a little more affordable than that.
How about just pay the employees? Okay, continue. Sorry.
But let's actually do some math here, okay?
500 grand.
This was going to be. Let me read more first, and then we'll do the math.
Sure.
They built the trip around a survivor theme with teams and challenges.
Oh my god.
It'd be fun, not too physically grueling. And the CEO of Plex, a free streaming platform, would play a role similar to that of Survivor host Jeff Probst. And basically, what ended up happening here is that this ended up being pretty much the Fire Festival of corporate retreats, in that people arrived there and like the food was a mess. They had a former Navy SEAL come in order to try to like get everyone active. The Navy SEAL just left because he was like, you guys can't keep up with me and I'm not going to like work with you. And it was pretty much a complete disaster by all accounts. One of the guys found a porcupine in his shower, which is not something you want to find in your shower.
Did not think they were native to
No,
Honduras.
use it as a loofah, that's fine.
Yeah, it's good for exfoliating, But here's the thing. You do the math, $500,000. I'm not saying it's a small amount of money, but for 120 people, okay, it works out to around $4,100 a person. And this was a 4-day trip, flights, hotel, food, Navy SEAL, and everything. I can tell you that when you're talking about like international travel for that many people in this type of corporate setting, you are not going to end up with the comfortable trip that you think for that much per person for that long.
Wow.
So again, like as Tucker said, look, if you want to do something nice for your employees, why didn't you just give them all a $4,000 bonus?
Ew, somebody had to eat a dead tarantula?
Yes.
Oh my god.
I
What's
didn't
the
want to
matter
go.
with
I didn't want to go through like all the stuff, but yes, it was.
How do you hire a Navy SEAL if you said it's not going to be physically grueling? I mean,
The
like
kitchen was-
their MO is being physically grueling.
The kitchen was trying to rush food out because the chef had never served 100+ people in one go. The steamed vegetables that came out one day, they literally just boiled the vegetables and flopped them into a catering thing.
Oh, there needs to be a documentary about this stat. Like,
Now-
Netflix needs to jump on this.
Now, there's other stuff in here that is really not like bad and is just people complaining. Quote, someone saw an alligator on the golf course. Okay, have you ever been to Florida
Yeah, that's
or like
normal.
the Carolinas? Like, yeah, you see like 3 a day if you're playing there. So, some of this is just, complaining. But, man, you got a porcupine in your shower and you're serving uncooked chicken for dinner? Seems a little problematic. Let's take a quick break for the whole rest of the day. We will go on our own little retreat for a bit, and we'll see you tomorrow with more Financial Exchange.